The sell-off continued today with the S&P 500 down 0.3%. We closed right below the zero gamma exposure level. That level's been hovering around the 60-50 level for the past couple of days as weakness has continued. And our GEX data shows that the largest gamma exposure concentration is at the 60-35 strike. Now that is right around where we closed. Most of that is at the money gamma, which is going to be expiring today. And in fact, if we actually switch here to our zero DTE view, we can actually see it even more prominently. This is the zero DTE gamma. It's over 500 million, and all of that is going to be expiring. This is negative GEX. So as that rolls off, that's going to open up potentially for tomorrow to see some positive movement to the upside. Doesn't guarantee that that's going to happen. It just opens the door for that possibility as market participants come in the morning, opening up new zero DTE positions. Don't forget, we also have a CPI data release at 8:30 a.m. So that could be a market moving event. And so we really want to see how things shake out in the first 15 minutes of trading tomorrow. Coming back to our total gamma exposure view on our chart, we can actually see from this low back on right before the election here on November 4th, we've actually got a trend line in place. And depending on how strict you are with your trend lines, we are coming right into this very important zone. That's also coinciding with this previous support resistance level that we've highlighted all throughout the last month. Previously, it was resistance as we approached it multiple times from the downside, finally breaking above it around Thanksgiving, and now it is serving as a support level. So we're coming right back down into this level. Very important. Of course, this always happens when key economic numbers are coming out, so it doesn't surprise me that it's happening right on the day before the CPI number is coming out. We also have PPI, I think, on Thursday as well. So key couple of days approaching, stay vigilant. There's going to be a lot of data being thrown at you, so you want to make sure you are monitoring both the technical and the GEX levels in real time. Next, let's take a look at Bitcoin. I'm actually really impressed with how Bitcoin has been holding up just below the 100,000 level, really showing some good support anywhere between the 90 and 95K levels. We've been bouncing off this zone multiple times over the last couple of weeks. And if you just look back, this is kind of a little bit of a bigger picture, zoomed out profile than what we usually look at. But if you come all the way back here to October, we were trading in the 65 to 70,000 range just 5 to 6 weeks ago. And so look at the move that has taken place. This looks like, of course, the classic bull flag pattern. Doesn't mean it's going to necessarily break out to the upside, but what I do find interesting is that gamma exposure is still higher between 100 and 110,000. And so it does look like there is some basing going on as market participants are continuing to hold. We haven't seen any follow through below the 90,000 level since we hit this high at 104. If we can get back above that level, then the 105K and 110K strike is going to be the next obvious targets. So the fact that we have not had a nasty sell-off after tagging this 100K is actually giving me a little bit more confidence in terms of the risk-on environment that we're in. A lot of market participants expected a big pullback after the 100K tag, and we really haven't seen that, outside of what the norm is for Bitcoin volatility. Turning now to Amazon, this is a name that we mentioned about a week ago. We actually exited our Amazon play. We had a call debit spread, the 205, 220 call debit spread, and we actually exited right around here, right after the 220 strike was tagged. Obviously, it would have been nice to continue holding that and collect the rest of that premium that was left in that debit spread. Nevertheless, Amazon has come all the way up, continuing to rocket higher towards this 230 level. And even on this pullback after the rejection off of 230, we're still seeing big volume coming in at the 230 strike. So this is like 80,000, over 80,000 contracts here at the 230 strike. That was just in today's trading volume by itself. So that tells me market participants are still interested for another potential move back up to the 230 strike. That could be, into year end or possibly into the January 17th expiration. So we're going to keep our eye on that. We may look for some opportunities for another entry into either another call debit spread or potentially some sort of calendar spread. One of the movers and shakers in today's weak market was Google. Google up nearly 6% today, coming back to the 185 level. This is actually an official breakout of this zone, kind of consolidated here back in the earlier part of November. Then we had the Chrome news, which really hit the stock all the way down to like the 165 level. And that ended up being the intermediate bottom at least, and slowly climbing back up, got above the zero gex level. And then of course, some new news came out today, popped the stock higher, which effectively broke out of this zone now. So I don't know if you recall a couple of videos ago, we mentioned that if we can get above this 180 level, that would be a key factor in bringing this GEX that was been sitting here at the 200 strike back into play. So that has happened. We're above 180, and now we see 185, 190, and of course the 200 strike all back in play. I don't think it's going to hit immediately. Obviously, this big move today, we could see some slight pullback, some consolidation. We currently have a position on that we rolled out into the January 17th expiration, so we've got some time on that. But it does look like market participants after the news today became very, very interested. We saw over 100,000 contracts traded at the 200 strike, and over 150,000 contracts traded at the 190 strike. So definitely bullish speculation in Google. So that's going to be interesting to see how that plays out. We're continuing to hold our position there. Next, let's take a look at Shopify. Shopify trading around the 113 level, pulled back after hitting the 120 strike, and we're reaching the zero gamma level. This level coincides with the zone that has been a kind of a zone of contention really for the last month or so. And this could be an interesting level for a little bit of consolidation and potentially a move back towards that 120 strike. If we just zoom out and we take a look at what the chart has looked like for Shopify, you can see the big move up, of course, pre-election November 4th was essentially the intermediate low, a huge move up, and basically is in this sort of bull flag pattern here. So between the 110 and 115 level in these areas look really interesting from a risk reward perspective for a long entry, for a move back to 120, possibly 125 or 130. Those seem like they're starting to gain some momentum. So that's going to be a name that we're going to be adding to our watch list in our community Discord. And if you guys haven't checked out our community Discord yet, it's free to hop in. I'll put a link in the description below. We've got a ton of great traders in there sharing their thoughts and trades and what they're doing in their own accounts. So you definitely don't want to miss that. Link in the description below. Also, if you're interested in accessing our gamma exposure dashboard and our option flow analytics tools, head on over to geeksoffinance.com. I'll put a link in the description below for that as well. Thanks so much everybody for watching, and I'll see you guys in the next video.